Welcome everyone to the Business Legal Lifecycle episode for this Wednesday. I'm Craig Mason. I have Jeremy Stretton here with me.
And I'm Jeremy Stretton. Hello everyone.
Today we're doing, the topic is on leasing and insurance. So we're going to go through a number of things with leasing. Jeremy's going to do that, and then I'm going to go through some things about insurance. So for those who know us, or even if you don't, we're obviously lawyers. We've got an office in Brisbane. We've also got one at Caboolture. At the moment, we're actually going through entering into a new lease. We're moving premises from where we are up the street. So you might think, oh, well, they're lawyers, they deal with this on a regular basis. But, you learn new things dealing with landlords, those sorts of things. And the things we're going to talk about today are relevant for everyone. When you're entering into a lease, it's an important document. It's going to be for a long period of time. You want to make sure you're happy with it all, and if you're not, it's hard to get out of those sorts of things. So it's a pretty serious thing to do, and it can be a bit scary if it's the first lease. You've just started a business and you're entering into a new lease. The whole point of what we're doing with the Business Legal Lifecycle is to give those people that are entering in, as their first lease, or even if it's your 20th lease, some insight into what you need to cover off on. So pretty important topic. We're pretty passionate about it, and it's relevant for us as well as lawyers as to the paint guy. So, as I said, Jeremy's going to talk about leasing, so I'll throw it over to him, and we'll go from there.
Great, thanks, Craig. And as usual, we've got our iPad on the side here with the stream. So if you have any questions whilst we're doing the live show, please ask it on the ask, and we'll see the comments on the iPad. And just before I get started, and as I'm transitioning over to the slides, just for anyone who might have caught us at the beginning, we put up a code word. If you watch to the end, we'll put that, tell you what a free offer is for this week, and also we'll also go through that. And if you're watching this on the replay through Facebook, then please you'll see that. So as Craig said, we're going to talk about leasing and insurance, and I'm going to talk about the leasing aspect, and Craig will talk about the insurance part. So just to, the theme for this month is Phase 2 Startup of the Business Legal Lifecycle. So this is an image of the Business Legal Lifecycle. It's the concept and the whole basis of our Facebook page, the book that I've written, and our placement tool is all about the Business Legal Lifecycle. And Phase 2 Startup, we thought that was a good place to start up our own live TV show. So that's what the Business Legal Lifecycle is, and circled in red is that. So as we said, the topic today is leases and insurance. So it's commercial leases. I'm going to talk a bit about the difference between a commercial lease and a retail shop. What is a lease, for anyone who doesn't know? I'm going to give some tips about the process and what to look out for. Then Craig's going to talk about what insurance is and the different types of insurance. So leases, and the first question, what is a lease? So a lease is a legal document that is usually somewhere between about 20 to 40 pages long, and it sets out the relationship between the lessor, who's the person who owns the land, and the lessee, or the tenant, who is the person who is actually running a business or leasing that property. So the lessor is sometimes called the landlord, and generally it would be in this picture, which is the nice premises that we've got a picture of. That would be the person who owns the land, whereas the lessee would be the pharmacy that is actually running the business from that property. Now, in Queensland and a lot of states in Australia, there is legislation which governs retail shop leases. Now, there's a lot of debate over what retail shop leases are as opposed to commercial and industrial leases. Now, why is this important? Well, in Queensland, and I think most other states in Australia, at least the other ones I've dealt with, New South Wales and Victoria and WA, the legislation sets out specific rules that govern retail shop leases. It puts specific onuses on landlords and prevents certain clauses and types of clauses from being in a retail shop lease that might be okay for a commercial industrial lease. Again, there's more disclosure requirements with a retail shop lease. For instance, in Queensland, a lessor has to provide what we call a lessor disclosure statement. And that's a document that sets out the general information about the lease premises. If it's a centre, information about the centre, number of car parks, and providing general information that a lot of tenants probably don't know that they can ask. and information that they really should know about their premises. So that's a really important document. There's often a bit of a discussion that goes on between a landlord and their solicitor over whether or not a premises is retail or commercial industrial, but we think it's pretty straightforward. There's a list in the Queensland Act, there's a list of business types that are considered to be retail shop leases, and then everything else is either commercial or industrial. So that's an important distinction to make, and when you're going to lease premises, it's important that you understand what the difference is and whether or not your premises is a retail shop lease or a commercial lease. Because I said before that there are requirements on landlords, well, there's actually also additional requirements for tenants. For instance, the tenants have to provide a disclosure statement. They have to get a legal advice report, which is a report signed by a lawyer saying that they've got advice about the lease, and a financial advice report to say that they've got advice from their accountant or financial advisor as to what the actual costs of the lease are. So very important distinction to make first off. If you're not sure about it, talk to your lawyer or even ask us some questions, and we'd be happy to help out with that. So the process. So I wanted to, in this part, go through the steps and the things to consider in the leasing process, because it's not easy. And at the end of this, what we'll do is I'll give you a link to our website where it's got a checklist that we've put together. This is free, no obligation. You don't have to sign up with us. If you just click on the link that we'll put below. In fact, I might put it up now, because so that people can see that and go to that website. That's our checklist for leasing and commercial premises. So that's the commercial leasing checklist. It's a PDF document. Feel free to download it and use it. So the first thing to think about when you're leasing a premise is to find the premises. There are literally hundreds and thousands of businesses around that you could look at leasing. So what you want to do is find a premises that you like, that suits your purposes. So you need to have a look at the location, where it is in relation to your clients. Is it a premises that you're going to go into and have clients come to? That was a big consideration for us, wasn't it, Craig, when we started our business, not to be in the city, because people didn't like the high costs of parking in the city. So we deliberately made ourselves a suburban practice, didn't we?
Yeah, absolutely.
Yeah, so that's a cost that people often don't want to go through. So you've got to have a think about what the right premises is for you and your business. Once you've found the right premises, obviously you've got to contact, there'll be an agent, or potentially the landlord might be leasing it themselves, but get in contact with them and figure out, I guess, what the terms are of the premises and what the landlord's looking. Remember that whatever's advertised as what the landlord wants for the lease is probably a high watermark for the lease of where they and the landlord where they want to be. So there's probably room to negotiate. There may not be. It may be that the landlord says this is the baseline. This is what I'm willing to accept. But usually what's advertised on the internet or on a sign would be a high point of what the landlord would want. So that's finding a premises. So once you've found a premises and you've spoken to the agent, generally the process is that you'll be provided with what we call an offer to lease or an agreement to lease. So the terms can generally be used interchangeably as far as what a landlord provides. But an offer to lease is generally a document that sets out the basic, what we call salient, and that's the legal term that we use as in these kind of agreements to say the key points of a lease and what needs to be provided. Now, it's really important here that you get some advice about what you're signing. So often we get clients who come to us who have signed an offer to lease but haven't actually got any advice. And I'll think of an example right here of a client who came to us about a month ago who was looking at leasing a premises for a coffee shop up at the northern suburbs of Brisbane, actually towards the Moreton Bay region. And they had they'd gone to the agent, they'd signed an offer to lease. Now, at the end of that document, it said that this was a legally binding agreement, and that if they didn't sign the lease, that they would lose a deposit, and I'll talk about a deposit in a minute, or a portion of that deposit as compensation if they didn't go ahead. What ended up happening was that the lease that was provided, the eventual lease, was on terms that were a little bit unfair, but basically the tenant lost their bargaining position because they didn't realise that what they'd signed was legally binding, in the sense that they would lose a couple of $1,000 if they didn't sign up to it. So an offer to lease might seem like a very simple document, but if you're not sure about it, come and get advice from your lawyer, and first of all, have a read of it. Generally, it will probably be plainly obvious to see what and whether or not it's something that's you should be concerned about. But have a look at it, and if it is something that you're concerned about, have a chat to your lawyer, and also maybe ask the agent as to what their view is on your ability to get out of that lease. I'll just double check there's no questions, so I'll keep on going. Before that's the offer to lease. The agreement to lease, that's generally used where you have a premises that's been built. So we often have clients who will be building a commercial premises, and rather than enter into a lease, because the building might not be completed, there might be an agreement to lease. So that's a document that you definitely need legal advice on. It will generally be drafted by a lawyer and will be a legally binding agreement that will set out the terms that the landlord wants for you to enter into a lease. An agreement to lease is generally a document that says, once these conditions have been met, you will enter into this lease. So make sure that you get some advice if you're entering into that. So the next thing to consider is the deposit versus bank guarantee or bond. Now, a lot of people make a mistake here thinking that they're the same thing. They're not. A deposit is an amount that's paid usually when you sign an offer to lease. That's a holding deposit to show that you're serious about entering into the lease. So again, I could go through probably a few hundred examples of clients who pay deposits on their leases and probably don't realise what it actually is. But a deposit is usually 2 or 3 months rent in advance that they're agreeing to pay when they sign the lease, so that they can show that to the landlord that they're serious. A bond or bank guarantee is an agreement that they'll hold that bond or bank guarantee, and if you default under the lease, that you'll actually pay that money to the landlord as compensation. So the classic example will be that a landlord wants, say, a 3-month bond or bank guarantee, and that's there to say that if you've entered into the lease, you default, and you don't pay rent for a couple of months, or a month, or any amount that's due under the lease, that they can actually take the payment for that rent or other payment out of the bond, and then you have an obligation to pay that money back in. But it is very important to understand that there is a difference, and it's a very definite difference, and so make sure that you understand that if you've got a deposit, that's basically prepaying your rent for a couple of months, and a bond or bank guarantee is for the guaranteeing your payment over the life of the lease. And just on that point, I'll just say that a bond is generally an amount that sits in an agent or the landlord's trust account for the term of the lease, whereas a bank guarantee is something that you can use to put the money in an account with your financial institution, and that money is then held for the period of the lease. And you can actually earn interest on that money at the time. So you've got to work out whether or not that's commercial and commercially viable, because there is a cost, obviously, with the bank that they will want to take and hold that money for that period of time. So that's the deposit versus bond or bank guarantee. So the next slide are the next 3 steps. Number 4 is an interesting one, and I think something that a lot of tenants don't think about, and that's what kind of incentive can you get. Now, incentives can be things like a rent-free period. It might be a rent reduction period over a period of time. It might be starting the lease later and having early possession. Or it could be having the landlord contribute a sum of money towards a fit-out of the premises. Now, there's many ways to be right, and there's many ways of doing this. So the incentive that you can get is something that you need to basically discuss with the landlord's agent or the landlord, but it's something that you need to be sure of what you want before you start. So, from a cash flow point of view, when you're starting a new business, 3 or 4 months or 6 months rent-free might be great. There will be a corresponding increase in the amount of rent that you've got to pay. There may also be the scope to pay, say, 3 months rent-free and then 3 months of half rent. There are many ways that you can do it. You can also get the landlord to pay a contribution to your fit-out. that's a common way that people use to get an incentive to enter into a business and enter into a lease. So you've got to have a look at what you can actually get. You've got to negotiate with the landlord. There will always be a trade-off. So if you're getting bottom dollar rent, it's unlikely that the landlord will give you any sort of rent-free period that's worthwhile. That they may not also contribute towards your fit-out, but have a look at what you can get, have a think about what you can get and what you need to make sure that your business can run. So there's no questions yet on any of that, so I'll keep on going. The length of the lease and any option periods. So when you enter into a lease, you'll enter it into it for a period of time. So it might be a year, it might be 3 years, it might be 5 years, it might be 10 years. Generally, it's not 10 years. And what business owners do and landlords do is they agree that to set up a lease that might be a 3-year initial term and then 3-year options, and that would be a 9-year lease. And what an option is the tenant's ability to what we call exercise the option to get a further period of time on their lease. So if you enter into a lease that is what we call a 3x3x3 lease, the first year you'll have an obligation to pay rent and all your obligations for the lease. Then you'll be able to exercise your option to enter into another 3-year lease, and then you'll exercise your option to enter into another 3-year lease. And what that does is it gives you as a tenant and a business owner the flexibility to know if you want to move, that you've got the option to do that. For to give you an example, as Craig said at the beginning, we're moving office in our Caboolture office, and as part of that, our first 5-year lease is coming up. We had a 5-year option. We've chosen not to exercise that and to move into another premises because we want a premises in a different location. So a long lease can work if you've decided that you want to stay in there for the next decade. But I think it's probably fair to say, isn't it, Craig, that people will make that decision at the beginning and then things will change after 5 or 3 or 5 years, depending on how long they've been there.
Yeah, I mean, size is obviously a big issue as well. You might get a small premises at the beginning, but you've got more people and need to move. So yeah, you don't want to commit to 10 years if you want to do 5 or 3. So
yeah, absolutely. And that's the kind of decision that you need to make. So the next point is, what do you have to pay? So this is talking about rent and outgoing. So you're obviously going to have to pay some sort of rent. And there are 2 different ways of looking at a lease. You can either be a gross lease or a net lease. And this is something that I always have to think about, because a gross lease means you're paying one rent amount for all rent and outgoings, and a net lease is the other way around. And so you need to be very sure when you're negotiating whether the landlord's asking for a rent that's inclusive or exclusive of outgoings, because you might think that it's a great rent rate and then find out that outgoings are on top of that. So you need to be really sure about what you're actually getting yourself into. The other thing to think about at this point is what's going to happen at the exercise of an option. We see many leases where a landlord might change the rent and outgoings to be, it might be all rent including outgoings for the first term, and then that might change for the second term. So that's all part of the negotiation that you have to have, but you need to be really sure of what you're going to have to pay. And part of the checklist that we've posted actually is to consider those amounts and to think about what amounts are actually due and payable under your lease. One thing I flipped over there, but I just wanted to double check if there was a point on this. The other point to remember about rent and outgoings is, how will that rent be increasing over the period of term? So you might have rental increases of say 3% or 4%, or you might choose to go on the consumer price index. So you got to have a think about how your rent will increase over the period of that lease, because the rent that you sign up to at the beginning of the lease is what's fair and reasonable at the beginning of the lease. And obviously, as costs increase, the cost of living, the cost of business increase, that rent should increase. So you'll need to have a think about what the actual rent is going to be, as well as outgoings. So outgoings are things like land tax, rates, water consumptions, security costs, maintenance of some plant equipment. You need to have a think about how those costs might increase over the period of the lease, and also factor that into your calculations. So going back to the next slide, what happens if the premises are destroyed? Now, this is something that we don't often like to think about, but anyone who, any of our people watching this who are in Brisbane will know of the 2011 floods, which was a tragic time for Brisbane, and there's been floods in cities all over the world, but this was something that really came home to business owners in Brisbane, to what happens if your premises are destroyed. And I'll give a quick example here. There was a printing business that was a client of ours, which became a client of ours after the floods. They were in a premises that got destroyed by the floods. Now, their landlord and their lease was poorly written and didn't provide a proper mechanism to what would happen if the premises were destroyed. They had other problems because their insurance company refused to pay out on their insurance, which is a whole other story and probably a story for another day. But we might talk about it in the insurances part. But their lease was poorly drafted and meant that the landlord was under no obligation to reset up the premises. So it's something that you're not thinking about what will happen if your premises are destroyed when you enter into the lease, but it is something that you need to think about, because otherwise it can cause you a lot of problems. So the next point is insurance. So Craig will talk about insurances in detail, but a lease will set out probably usually 3 or 4 items of insurance that you need to have in place. So you need to make sure that, 1, that they're fair and reasonable, and 2, that you can actually get them. Because one thing that a lot of people miss in a lease is the insurance for or the terms of the insurance. And what I'm talking about here is if a landlord, if the lease says that the landlord has to be noted as a insured on the policy. So sometimes it'll say that the landlord and the tenant will be co-insured. Now, there's an additional cost to that. Some insurance companies don't like to do it, so that's something to think about when you're entering into the lease. Make sure that you've considered those terms, and if you haven't speak to your insurance broker about those terms. But I'll let Craig talk about that in a bit more detail. The next one, and probably one that again that people miss, is default terms. So default terms are what a landlord can do to you if you default, and what is actually a default under a lease. So there can be many variations to this. Every law firm seems to have their own lease. And what I'm talking about here is knowing what happens if you default. So some leases will say that if you don't pay the rent on the 1st of every month, you're in default. Other leases will say if you don't pay the rent for 7 days, then you're in default, or 14 days you're in default. And that's important to know, because if you are suffering a cash flow squeeze, you might want to stretch out the payments for a couple of days. We've probably all done it in business. So you want to make sure that you know your default terms and know where that's up to. So the last 3 points are maintenance and repair. So this is another thing that comes up very often in disputes, and I'll give an example here of one that comes up so often, and that's air conditioning. So economists talk about the fact that air conditioning has allowed businesses to become a lot more productive, especially in hotter climates like Brisbane, Queensland, where we are. But it gives rise to a dispute that often comes up, and that becomes down to who has to maintain and repair the air conditioning equipment, and for what. Fault of the air conditioning equipment that comes up. So often a lease will say that a tenant has to pay for the maintenance of the air conditioning for normal wear and tear and the normal servicing, whereas it might say that a landlord is responsible if there's a capital item that defaults. Now, there are literally hundreds of cases disputing what a lease says over whether an item's a capital item or not. It's something that you should get an idea of when you enter into your lease, to make sure that you know what your landlord's up for repair-wise and what you're up for repair-wise. Air conditioning is just one part of the premises. It's very much of our mind, because we have an air conditioning unit that's probably in our premises where we are today. It's probably the only thing that could really come up as a dispute. However, if you're running a shop and you've got a shop front and there's a roller door, for instance, that's another big one that comes up. Who's responsible for maintenance of the roller door? Who's responsible for the level of damage? Often, as a tenant, you'll just need to make the repairs, and it's a decision as to then whether or not you go after the landlord for the repair if you think it's a capital item. So have a think about those items. Make sure you get some advice about who's responsible for maintenance and repair. The second last one is end of lease. So what we're talking about here is what are the obligations on you, the tenant, to repair the premises at the end of the lease. So often that will be, say if you're in a big shopping centre, often that will be that you have to gut the premises out and put it back to the shell that it was when you took over. So if you're in a Westfield, in Australia, that's, to anyone who's watching this overseas, that's a big shopping centre. I know you've got other ones in other countries, but Westfield will require you to basically strip out the whole shop and put it back to an empty shell. If you're in a different set of shops, there might be a different obligation. But you need to make sure that you're very clear on what that is, because you've got to put the lease back and the lease premises back to the condition it was at the start of the lease. In these days, where even us lawyers can run TV shows on our laptops and stream it out to the world, use your iPad, use your iPhone, take photos or video of all of the repairs. I'm going to go up there and do that of our new premises on Friday, Craig, just to make sure that we know exactly what it looked like before we go in there. Not because we think the landlord would do anything wrong, just so that we have a picture or a bunch of pictures in our mind of what actually the premises looked like before we did any work and before we moved in there. As I say, it's something that we can so easily do these days, so spend 5 or 10 minutes and go and do that before you enter into a lease. The last thing that I wanted to talk about as far as the terms to consider for a lease is the car park. As I said earlier, one of the reasons that we went and became a suburban firm was to have car parking, because it's so hard to get car parking in CBDs, central business districts, especially in Australia. The cost of parking is up here. So making sure that you've got car parking available for your clients and also for your staff. We have a team in each office of around 5 or 6 people, depending on what day they're there. And we need to make sure that our staff can actually park and have a proper car park for where they're going. Anyone who's been to our Brisbane office will know, despite our best intentions, if we've got a busy day with lots of staff in the Brisbane office, we'll know that it's often can be a bit of a struggle. So you need to know where your car parking is and what your car parking situation is. So all of these things are things that you need to get advice on when you enter into a lease. You need to read your lease. Don't just rely upon your lawyer or your advisors to read your lease. You're signing the document, read the lease from beginning to end. Ask questions. If you don't think something's fair, ask for it to be changed. So many people come to us having just signed a lease or not having read the lease and said, why didn't you advise us on X, Y, and Z? We tell them that we have. They don't even read our lease advice. And then we're trying to change things in the lease, sometimes years down the track. So it's a document you're signing. It's something you're responsible for. So please read the document, ask the questions, make sure that you've thought about all the different avenues, and make sure that you've thought about all of that. If there is a bit of background noise here, we are doing this for the first time in our Brisbane office, so we do apologise if there's any. There was a loud car that just went past, wasn't there, Craig? I think it might have been a motorbike. So we do apologise if there's any noise there, and if you're not clear on anything, please let us know. That's everything for leases, for the leasing process. So the last thing I just wanted to talk about the lease disputes, and I'm not going to go through that in great detail, except to say that avoid disputes at all costs. A lot of people come to us, they want to have a dispute with their landlord or they want to have a dispute with their tenant. What they don't realise is the cost to having a dispute. And it's not just the cost of paying us lawyers, it's the cost of the emotional toll that having a dispute causes on people. So make sure that you've had a think about whether or not it can be resolved. Talk to people. Probably the biggest reason for disputes is that people don't actually talk to each other, and that they could actually resolve matters way back in the past rather than waiting to the dispute in the future. So if you're having a dispute with your landlord, address it early on. Now sometimes, I'll acknowledge, sometimes people can't resolve disputes, but make sure that you at least try. And if you're in a retail shop and you've got a dispute, there may be a mechanism through the Retail Shop Leases Tribunal. I'm not going to go through that in any detail except to just flag it as something that you might want to be aware of. That there is a tribunal, it's run by QCAT, and you can actually resolve matters quite amicably. They don't like lawyers in there for obvious reasons because we create disputes, and sometimes, quite rightly so, sometimes probably not rightly so. So make sure that you get some advice, but make sure that advice is commercial and that you know where you're going. So look, that's enough from me on leases. I'm going to hand over to Craig to talk about insurance. As I said, I'm obviously here for the rest of the show. Ask any questions as we go, and otherwise, I'll hand over to Craig.
Excellent. Thanks, Jeremy. So the reason that we're talking about insurance with leases is, as Jeremy alluded to earlier, there'll be certain types of insurance that you have to get, or the landlord will make you get in relation to the lease. So that's why we're talking about it. As always, with the business legal life cycle, we encourage everyone to seek advice from their advisors. So insurance is a pretty big and broad area, and it's not something that many people are going to be on top of as a hobby. This is something that you go and you speak to a broker about, because they'll be able to advise you about what insurances you need and look around for the best possible price. Obviously, insurance isn't going to be cheap, and the costs of getting every single possible insurance that's available to a business is going to be high. So you've got to pick the important ones, try to avoid the unnecessary ones, obviously, and that's where you get the advice from your brokers. So obviously the idea of insurance is you've got an agreement with an insurance company that they'll provide a guarantee that if something happens under that policy that they'll pay out. So you've obviously got to meet the obligations in the insurance policy, and look, the product disclosure statement is going to have a lot of fine print in it, and we encourage everyone to read it and seek the advice and make sure they're aware of what they're entering into. You don't want to think you're covered for something and then it happens and you sit there holding a bag of and your insurance policy isn't getting paid out. So that's kind of one of the examples that Jeremy was talking about before. So seek the advice, don't just rush in and just get every single possible insurance that you want, because they're not all going to be relevant to your business. But one of the main ones that your landlord, for instance, will want you to have is public liability. So that's where you're protecting yourself, your business premises, and these are all business type insurance we're going to talk about today. Obviously, there's personal type insurances, life insurance, income protection, those sorts of things. That's in the estate planning phase.
Yep.
They're all just as important as these ones, but we're only talking about business type insurances today. So public liability, obviously if something happens on your premises that a customer's come along and they slip on a banana peel, that's going to be what public liability insurance is about. So the landlord will have an amount that you've got to be insured as a minimum standard, and that's sort of 10 or 20 million or something, isn't it? So it's quite high. Again, seek the advice about what you're doing. So it's going to cover any negligence if you didn't pick up the banana peel. It's the sort of things you hear or on the news or in the paper with Woolworths and slipping over some water that wasn't cleaned up, those sorts of things. So pretty important one, because if you don't have it and something does happen, someone's injured, they could be prevented from working for the next 10 years. They could be a neurosurgeon, whatever it might be. So the risk can be quite high. So as far as an insurance that you must get, I'd say that's probably number one, pretty close to.
Absolutely, yeah.
And obviously renting into a premises and a lease, then that's one of the ones that is going to be needed. So the other one that's relevant to us in particular and any other service-based sort of industry is professional liability or professional indemnity insurance. So with lawyers in Queensland, we've got to insure under the one insurance company. We can't pick and choose. For other industries, you might be able to go to and get different prices and those sorts of things. So we've got to insure under the one company, which doesn't give us much choice. But anyway, and that's to cover negligent advice. A lot of times bad financial advice, or not letting someone know something that's relevant. Those sorts of things. Pretty big in the legal industry, the accounting industry, financial planners, those sorts of things. If you're giving bad advice and the investment, for instance, sucks, for want of a better word, and fails miserably, and you lose all your money, and it's based on someone's advice that was negligent, then their insurance company under the professional indemnity will hopefully pay that out and compensate the person. So as far as that sort of industry goes, pretty important. Obviously, we don't go into any advice wanting to do it negligently, and most people wouldn't do it, but it mightn't necessarily be negligent. It could be that you didn't consider something, or something small that popped up. So something to always keep in mind if you're giving that sort of advice, to have professional indemnity insurance. One that I don't think's on this slide, it might be on the next one, is product liability insurance.
It's actually on the
Oh, was it? Okay,
yeah.
I missed that. Product liability insurance. So that's for the other businesses that are selling products, and that's to cover if you sell a product and someone gets injured in some way from that, then you've got product liability insurance to cover those sorts of things. So again, pretty important. You're not going into it to sell a product that's going to injure someone or cause someone damage, whatever it might be. But you want to cover yourself. So if you're in a product-based business, you'd have product liability insurance. If you're in a service-based advice business, you'd be getting professional indemnity. Everyone would have public liability insurance, I would suggest. Workers' compensation, which kind of fits into public liability. So public liability is the outside world coming in and slipping on an uphill. Workers' compensation insurance or work cover is in relation to your workers, obviously. So another necessary insurance, if someone gets injured at work, then you have work cover that comes in and basically organises all that, and they get paid through time off or for whatever it might be to compensate them for their injury. Pretty big industry, particularly in Queensland. That's where we're based, so we can talk about that. There's a lot of law firms that are built just on work cover claims. So it's something that you want to have because if you don't, and someone gets injured, it can be quite high, the payouts that come under that, because it's taking into account the fact that they mightn't be able to work again, or those sorts of things. And if it's a high-paying job, the economic loss can be pretty high. So definitely something that needs to be considered. And then you've got, I don't know if it's on the next slide. No, it's not actually mentioned on the slide, but one of the other ones that's big with leases is your plate glass insurance. So if you've got a shop front that's made out of glass, obviously, then you'll need to get the insurance to cover that. So that's the situation where you've got little Johnny Rotten throwing something through the plate glass, or at a shopping centre, whatever it might be, and that's to cover the costs of replacing the glass. Mm-hmm. So unfortunately, it's something that is required these days, because you see it yourself just walking along the street. A lot of smashed in shop fronts which obviously is a cost to replace the entire thing. So landlords will require that. For instance, our office at Caboolture is all glass at the front, so we had to get plate glass insurance, and most other places like that are going to need that as well. So one that can't be avoided, but obviously if you don't have any glass, then don't get plate glass insurance. Consider what you need. Don't just blindly get everything that is available. So that sort of covers the people type insurances where someone gets injured. The next one on that slide there is business interruption insurance, and that can cover a variety of things. But one of the big ones, obviously, is natural disaster type events, which what Jeremy was talking about before with the floods. So something that you need, and talk to your broker about what level and what how much it's going to cost and those sorts of things, because again there's different levels and different premiums that you're going to have to pay depending on how much you want to cover yourself for when it comes to those sorts of insurances. And you've got to be careful of the fine print and those sorts of things. The example that Jeremy was giving before, I'm not sure exactly what happened with the insurance as to why
It comes. I'll just quickly go into that. It comes into the difference between the rising water levels from a creek and ones that come up a drain. And in Brisbane, there are a lot of different insurance policies that didn't pay out on one type and did pay out on the other. And in that case, because of the way that the water came off out of the creek, they refused to pay out the insurance. So you've got to be really careful as to what the actual terms of the insurance are. To be fair, that was back in 2011, and a lot of the insurance companies have lifted their game on that front. But it is something to be wary of.
Yeah. Yeah, you've always, read the fine print, talk to and with a broker as well. If you do have a claim on your insurance, they can help you with making those actual claims as well. So you don't just get the insurance with them and then they disappear. They're there to help you throughout the process if you do have to make a claim. Hopefully you never do, but at least you've got someone there that knows what to do and can help you with that. The last three insurances here is equipment or car insurance. Motor vehicle insurance is obviously a really big one. If you've got equipment that yellow goods, excavators and those sorts of things, and obviously you're going to for those sorts of things you want to have insurance for obvious reasons. If you've got it under some form of hire arrangement or lease arrangement or whatever, then they're going to require you to have those types of insurances anyway. So, pick and choose. You don't just get insurance on your equipment just for the sake of it. It's got to be something of value. I mean, with insurance, you want to get insurance that if you didn't have it and something happened, that's basically going to kill you financially, kill your business. So you're not going to get equipment insurance necessarily for your printer, for instance. So hopefully you're in a position if something happened to your printer that you'd be able to pay for that yourself or whatever, your photocopy or whatever it might be. So you're not just going to get it for everything, but your larger sort of equipment, obviously your cars, you'd want insurance. If you've got cars owned by the business, again, talk to your broker about those sorts of things to know what level you need to get and the premiums and what it's all going to cost. So seek the advice. Another big one that's coming up a lot lately is your cyber insurance. I've spoken to IT consultants before, and they've sort of got differing attitudes. One attitude is, you don't need to get cyber insurance. I've got you covered. Don't worry about it. And then others are saying, look, I can't cover you for everything. The world out there is, in the cyberspace is constantly changing. There's a lot of clever people in, other whatevers that are developing new ways of hacking and viruses and all those sorts of things. So, our suggestion would be talk to your broker. Depending on what business you're in, cyber insurance might be a necessity. Because I don't think any IT consultants would necessarily be able to protect you 100% from any attacks. And the idea with cyber insurance, and obviously there's different products, but if you get a particular one, they'll have their own IT people that could come in and as part of the insurance policy, come in and help out and try to detect and get rid of the virus. And if it's not, and you've got to rebuild your whole computers, that'll cover that. Or if you can't operate at all for several days, then that's all going to be part of the policy. We know ourselves viruses that have come in, particularly with the use of cloud-based sharing, document stuff like Dropbox and those sorts of things. Viruses that can get in there. You might click on an email or whatever it might be, and they're pretty clever, and it looks like an email, a legitimate one. But if you're not banking with Westpac and you get an email from Westpac, probably don't click on it. But make sure you're wary of that, and everyone in your business knows about don't click on these things or whatever it might be. And if in doubt, obviously always ask your IT department or your IT consultant. We had a virus that came through that turned everything into the what was it, the Lion King thing, was it?
Hakuna Matata.
That's the one. So it turned everything into Hakuna Matata documents. And then basically you get an email saying, if you want your documents returned to what they were, you've got to pay us, 1 million bitcoins or something. So, if you've got insurance, then that could cover, fixing all those sorts of things. We luckily had, measures in place that meant that we didn't have to worry about the insurance at that point. But you could see that happening at a larger scale to a different type of business, depending on how they're set up, which would essentially, destroy the business. So, one to definitely look at, and I think it's becoming a lot more popular than what it once was.
It's very important, isn't it?
Yeah. And so the last one on there is key man insurance. So it's sort of touching on the sort of personal type insurances where you insure the key man or the key woman in relation to if something was to happen to them, then the policy would pay out to basically cover that loss, whatever that might be. If they can't work anymore, then the costs of having to find someone else, or the loss of income, or whatever it might be. So if your business is set up like that, then your key man insurance is something you really have to consider. So I'm fairly certain that's all the insurances that we were going to talk about.
That's right, it was. Yeah. Yep.
So we harp on it a bit, and if you've tuned in to the other episodes, we're pretty big on seeking advice from a variety of sources, and in this particular one, obviously with leasing, you've got your lawyers and your accountants that you want to talk to about your lease. With insurance, you've got your insurance broker that are there for a reason. They don't. Most of them, I don't think, charges an upfront fee. It's like a mortgage broker; they get a commission or whatever it is. But talk to them because they can look into different companies' insurance policies and get the best deal for you. So that's leasing and insurance. Was there anything you wanted to say about leasing or insurance, Jeremy?
I think you've covered it. I'll just switch back off the slides. I think you've covered it. I think the insurance is just important to have in place. So if you're not sure about it, get advice. That's probably the best advice that we can give you, because everyone's situation is different, and don't just rely upon barbecue advice to think that you've got it done correctly. So at the beginning of the recording, there's a code word. If you're rewatching this, you would have noticed it. If you're watching this live, then go back and check it out. For that code word, what the offer this week is if you type that code word in a message to Business Legal Lifecycle, that comes through to Craig and myself, we will do, for the first 5 people who write that code word, we will do a free consult on any legal topic to do with your business. So our specialty and what we do is business. We will provide up to 5 people with an hour free consult that we normally charge $300 for. But as a thank you for watching this show, that we'll give you, so that you can get some value and see about what you're going to do about improving your business. So that's it for today's show. Tomorrow night, if you're part of the Moreton Bay Property Networking Group, we'll be live streaming that from 6:30 Brisbane time. If you're in a different part of the world, check that out. It's basically a group that meets once a month. On the third Thursday of every month, where we go through different different topics to do with property law and property in general. Tomorrow night, we have 2 speakers. The first is Warren Pavey from Crediflex, who's going to be talking about not insurance brokers. That's the second speaker. The first speaker is talking about mortgage brokers, and the second speaker is Jason Matthew from Insurance Web, and he's actually going to be talking about insurance for properties. So if it is a topic of interest to you, you're going to hear straight from the mouth of an insurance broker what insurances they have in place. But Craig, what have we got lined up for Business Legal Lifecycle?
Yeah, okay, so Monday, Fast Fix Monday, which is our 10-minute snippet that we do every Monday because you don't get enough of us on a Wednesday. So the topic this coming Monday is the top 3 mistakes that we see in leases. So sort of following on from today's larger episode about leasing, Monday's Fast Fix was top 3 mistakes. So join us for that. And
if you want to like our page, if you've seen this on your Facebook feed, it's Biz Legal Lifecycle is the, or if you search for Business Legal Lifecycle, you'll get that. But the tag in Facebook is BIZ Legal Lifecycle. Like our page, you'll get updates whenever we do these, which is twice a week, and we look forward to seeing you then. So from now, bye from me, and
thanks everyone. See you Monday.